Hi everyone, I'm Doug Alsdorf, and in this video, I'd like to show you how to answer a quiz question, particularly question number 4 from chapter 6. So first off, let's go to the YouTube channel for the content, click on the WordPress page. In this case, we're going to want the spreadsheet. So click on spreadsheets. The spreadsheet to answer this question is from chapter 6, and it's the family budget spreadsheet. Download that. And then now let's also have a look at the actual quiz question. Click on quizzes on the WordPress page. And now let's have a look at chapter 6 quiz question, in particular question number 4. So we'll go scroll down to that. And also let's go ahead and open that family budget spreadsheet. I'm going to set the family budget spreadsheet just kind of over here to the side, and I'm going to set the question 4 over here so that we can see them both at the same time. The year is 2035, and Omar is now 30 years old and married, living with his partner in a coastal city. Things are a little more expensive in the coastal cities. So here we are, year 2035 and 30 years old. So the spreadsheet has already set up that way. He's making 90,000 and his partner is making 85,000. So let's set his salary to 90,000 and his partner to 85,000. Note that the taxes are automatically calculated for them from this tab down here named Tables from 2024. Their rent is 4,500, so we need to change their rent to 4,500, not 45,000, 4,500. They have no pets, do not spend money on movies, and together spend about $25 per month on clothes. We'll find those expenses down here in the tab named Table 6.1. Click on that. Scroll to the top and scroll to the right. This is the table where the basic expenses are available to us here. We might call these spending cash types of expenses. In other words, these are expenses that you can do without. You don't have to go to Starbucks. Over here on the left, these are the expenses that you have to pay. These are your utilities and so on, groceries, insurance that you have to pay. So let's see here. We said they do not have any pets, so we'll set pet care to 0. Do not spend money on movies, so we'll set that to 0. And they only spend $25 per month on clothes, so we'll set that to $25. Fortunately, they have both paid off their student loans and neither has a car loan. So we're going to scroll over here to the middle and we'll see that their student loans, we can 0 those, make certain the car loan is 0, and double check that the mortgage is also 0 because they're renting. Fortunately, they've both paid off their student loans. Neither has a car loan. We've already taken care of that. But because of these payoffs, neither brought any money into their marriage at age 30. So we're going to have to go back to the tab named Budget, then scroll over here to the right. We need to 0 out this cell. That's how much money they're bringing into their marriage at age 30. Age 30 is the top row, and down here, this is age 40. So we're going to 0 that out according to the question. Making all these changes and using the defaults. Okay, so we need to double check that we have the defaults set up. Go under the red triangle, make sure we have the defaults. So we're going to keep this at 0 as the question directed us. 2%, 10,000 and 2%, so that's good. 0, 16 and 2%, that's good. And then 2% for all of these values. I'm just scrolling back over here to the left, 2% for all those. So we are all set now to finally figure out what the question is. Making all these adjustments and using the defaults, how much might they have invested by the time they are 40 years old? Well, there's age 40. Let's scroll over here to the right and see they might have $795,000 invested. Let's see what the choices are. Yeah, that's one of the choices. So let's write that down. We're going to write down 795,000. All right, next up, let's see what else the question is asking us. This is actually a very important part of this question. In the current setup, Omar and his partner are contributing 15,000 to their tax-deferred accounts, their 401k and IRAs, and 35,000 to their taxable accounts, roughly a 30-70 split. We're going to have a look at columns K and L at age 35. So let's scroll over here, get to age 35. There it is. I'm going to highlight that row and then have a look at columns K and L. That's these two columns right here. And yeah, 15,000 there, and we're somewhere around 35, 45,000 into this column L. Let's change that to 100% contribution to their tax deferred accounts. So we're going to change K6 to 51,000. That's the cell right here. We're going to change this from 10,000 to 51,000. This is going to be a really important change. What this is going to do, we're not changing any of their expenses, any of their costs. We're not changing their utility bills. We're not changing their grocery bills. We're just changing where they're investing their money. Instead of investing the bulk of their monies in their taxable accounts, we're going to invest the bulk of their monies in a tax deferred account. By doing that, that's going to change their taxes. Note how these taxes are going to sharply decrease, and that's going to allow their annually invested amount to increase. Let's watch how much their annually invested amount increases because they're paying less taxes by investing more in their tax deferred account. This is super cool. Look at that. They have a lot more money to invest and now end up with 992,000. Let's see what one of the choices are. Yeah, 992,000. I'm going to write that down over here. Now, let's scroll down to the answers for this quiz. And all the answers in these PDFs are in the second half of the PDF. And we just need to scroll down to question number 4. And we wrote down our answers were 795 and 992,000. Indeed, those are the answers. So we did good. All right. Once you have a spreadsheet set up, though, it's often useful to change one parameter, maybe two, but one parameter at a time, just to see the impact from that one parameter. So let's scroll over here and imagine that because they're living in a coastal city, maybe 4,500 is not enough for their rent. Let's change it to 6,000 and see what happens. Okay, there's too much red over here in this annual remainder amount. 1 year of red is okay, but many years is not. So they're going to need to decrease some of their costs. In this case, the simplest approach is to decrease their investments. Let's change that to 40,000. Still too many years with red. Let's change it to 30,000. Well, 2 years is that's probably too much. Let's change it to 27,000. All right, $153, that's in the noise, and they have $597,000 invested. That's $200,000 less when they were doing 10,000 here and 4,500 in rent, and it's $400,000 less than when they were able to have 51,000 invested in their tax deferred accounts. That rent was pretty expensive. So it's not whether you should or shouldn't live in such places, it's that you need to be aware of how these costs impact your life. All right, I hope this is helpful to you.